Today we're covering the best proxies for cryptocurrency trading bots in 2026. Although cryptocurrency trading bots execute thousands of operations per hour across exchanges like Binance, Bybit, and OKX, without proper proxy infrastructure, these bots face IP-based rate limits, geographic restrictions, and outright bans that cripple their effectiveness. Choosing the right proxy type is not just a performance decision, it directly impacts your profitability. Multi-plan. Every major cryptocurrency exchange enforces IP-based rate limiting. Binance limits API requests to 1,200 per minute per IP address. If your bot executes high-frequency strategies, you will hit these limits within minutes on a single IP. Exchanges also monitor for suspicious activity patterns tied to individual IP addresses. Running multiple strategies or accounts from a single IP triggers risk management flags that can result in temporary suspensions or permanent bans. Proxies solve these problems by distributing your bot's traffic across multiple IP addresses, each appearing as a separate legitimate user. The right proxy setup gives your bot higher effective rate limits by spreading requests across IPs, geographic flexibility to access region-locked exchanges, to redundancy so a single IP ban does not take your bot offline, and separation of concerns between different trading strategies. Mobile proxies are the gold standard for crypto trading bots. They use IP addresses assigned by mobile carriers, which exchanges treat with the highest trust because millions of legitimate users share these IP pools. They carry the highest trust score on exchanges, rotate automatically through carrier net, have extremely low ban rates, and work well for multi-account setups. The trade-off is higher cost per GB than Datacenter proxies and slightly higher latency. For most trading bot operators, mobile proxies offer the best balance of reliability and performance. Residential proxies use IP addresses assigned to home internet connections. They offer good trust levels but are less reliable than mobile proxies for sustained high-volume trading. They have good trust scores, large IP pools, and reasonable pricing for medium volume usage. The downsides are variable connection stability, some residential IPs already flagged on exchanges, and slower rotation compared to mobile proxies. Datacenter proxies are the fastest option but carry the highest risk of detection and blocking. They have the lowest latency, which is critical for arbitrage, and are the cheapest per GB with consistent connection speeds. The drawbacks are that they are easily detected by exchanges, have higher ban rates, and are not suitable for multi-account strategies. A production-grade crypto trading bot should implement a proxy rotation layer between the bot logic and the exchange API. This layer handles distributing requests across a pool of proxies, tracking the health and latency of each proxy, and failing over automatically when a proxy goes down or gets blocked. Your bot must monitor proxy health in real time. Dead or slow proxies cost you money in missed trades. A health monitor checks each proxy's latency on an interval, removes proxies that exceed your threshold, and swaps in replacements from your pool automatically. Binance enforces strict rate limits and uses sophisticated fingerprinting that use mobile proxies with sticky sessions of at least 10 minutes. Avoid rotating IPs mid-session, as Binance flags this as suspicious behavior. Bybit is more lenient with IP diversity but monitors WebSocket connections closely. Use dedicated proxies for WebSocket streams and separate proxies for REST API calls. OKX requires consistent IP addresses for authenticated API calls. Assign one sticky proxy per API key and maintain that mapping consistently. Although the number of proxies depends on your trading volume and strategy. Low-volume bots making a few hundred requests per minute can get by with a small pool of mobile proxies. Medium-volume operations need a larger pool with health checking in place. High-frequency strategies require dedicated proxies per account and per strategy, with automated failover. Deadly for trading bots, every millisecond matters. Choose proxy locations near exchange servers. Binance operates from Tokyo and Singapore, so place your proxies in those regions. Use persistent connections, since establishing a new TCP connection to a proxy adds 50 to 200 milliseconds, and reusing connections with HTTP keep alive avoids that overhead. Implement connection pooling by maintaining a pool of pre-established proxy connections ready for instant use. Monitor and remove slow proxies automatically by rotating out any proxy with latency above your threshold. They are slow, unreliable, and often operated by malicious actors who can intercept your API keys. Do not share proxies between accounts. Each exchange account should use its own dedicated proxy to avoid cross-contamination that triggers multi-account detection. Always use authenticated proxies. Open proxies are shared by thousands of users and are universally blocked by exchanges. Implement failover logic so that if your primary proxy goes down during an open trade, your bot switches seamlessly to a backup without losing its session. The recommended proxy setup for a crypto trading bot in 2026 uses a primary layer of mobile proxies with 10-minute sticky sessions for API trading, a monitoring layer of rotating residential proxies for price monitoring and data collection, a backup layer of mobile proxies in a different geographic region, and automated latency monitoring with sub-second failover. This layered approach ensures your bot stays operational even when individual proxies fail or get temporarily blocked. The investment in proper proxy infrastructure pays for itself many times over through consistent uptime and reduced ban rates. The best proxy for your crypto trading bot depends on your specific strategy, volume, and exchange targets. Mobile proxies offer the highest reliability and trust scores, making them the default choice for serious traders. Datacenter proxies work for pure speed plays like arbitrage, but carry higher ban risk. Whatever you choose, invest in proper proxy management infrastructure. Health checking, automatic rotation, and failover logic are not optional for profitable trading operations. For more guides like this one, visit us at dataresearchtools.com. See you in the next one.